What's going on, guys? Back again with another amazing video. And right now, I'm at the headquarters. I'm about to actually head out to FNB Stadium, got a game to watch. It's a full day. Honestly, it's in the evening. And yeah, man, this video won't be much. Won't be not long, not much. Sorry, guys. Won't be long, but it will be long enough, about 15 to 20 minutes, something less like that. But pretty much today, I want to speak about Eurusd, how it's been moving, and pretty much how we've been making money on it, how you can catch these trades, and how you can trade it going forward. You guys can see this is Eurusd. I mean, the price actually comes from a very strong low in February, came all the way up. I mean, if you look at it on a daily, honestly, it's been moving very technically sharp in terms of just breaking previous high, coming to sit on it, breaking previous high, come back and sit on it, breaking previous high, come back and sit on it. But right now, we've seen a double top on the daily time frame, and prices approaching another high. And if it breaks that high, that's probably obviously an all-time high for this entire year. As you can see, when the year opened in December, January, we were like literally on a very strong low here. So the price, if it does break this current if it breaks about 19,000 or yeah, like 18,500, that'll be the all-time high. Will USD break the all-time high? I don't know. But we're gonna go into the market breakdown. Before I do that, though, I'm gonna be on this marker here, on this marker board, where I'll show you guys how to actually read and understand trends. And because people always ask me about explaining breakouts and how do I know the market is going to turn on big time frames. And every time I'm doing my analysis, I'm always just breaking down what is already in trend. And I'm going to show you guys how to identify those and why I normally focus on a moving market instead of a market that's always waiting for a breakout or possible major change of direction. Because in most people, if you look back at the screen here, a lot of people would want to and try and estimate a possible drop on USD, where they'll pull a trend line from this low point, put it on the low here, and say, no, when the breakout comes, then the market will go down. But that, of course, kind of delays your trades. It finds you not actually trading because you're waiting for pretty much a move that might not happen or will take like a year or two to actually take place. But it makes sense when you analyze it or you're sharing with people. Like that's one thing where mentors literally get all the analysis wrong. Like they'll send a screenshot to a certain group or to their students, like, yeah, they pull a trend line on a daily, like, yeah, when it breaks here, when I start seeing sales. What do you mean when it breaks here? This thing has been going up since January. When is it going to break? In 5 years? No, we're not gonna do that. So I'm gonna be on the marker here. I'm gonna show you guys how exactly everything works on the marker, and explaining trends and pretty much technical understandings and how I trade. My trading is very simple and straightforward. So when I get into it, yeah, just give me a couple of minutes and then prepare the marker board and the screen, and then we're definitely inside. Danko. Back again, guys. Continuing with the session. So right here, I'm gonna give you guys a simple example. So this will be our normal US 30 chart. Of course, trading with the biggest RCG. So I'm gonna draw out a graph here. Very simple, and a normal chart. This black marker of ours looks like it's twerking a bit, but it's not too bad. So I'm gonna draw out a chart for you guys, and here we'll be analyzing a market, obviously a normal drawing of where a chart is actually going down. So do something like this. Just want to give you guys a simple example of how to actually technically understand. So this movement I've just given here is a downtrend that you'll always find in any time frame. Whether it's 1 minute, 5 minutes, 30 minutes, 15 minutes, 1 hour, 4 hours daily, you'll always find a momentum where the market is going up and down, whether it's moving up or down, but the market will never just ever shoot up, It'll always have a technical understanding. And in any technical understanding that we have, always remember that whenever we're trading, is always it's sell high and buy low. That is the common understanding, or that is the very first powerful understanding that you must have as a trader, that whenever you're going into a position, you must find yourself buying at a low point and selling at a high point. The first thing you want to do is then identify the highest point on the chart, which is this current point on this drawing of mine, and then the lowest point from current price. So current price would be at this price. That is where the market will be moving. This is the current price, and then the lowest point from current price, of course, would be this area here. And then from here, what I want to do is actually understand how did the market actually go from this high to this low. That is doing a technical breakdown, simply without even complicating, without putting any indicators or whatever the case may be. Just highlight your highs and lows, your support and resistant areas right there. That's a high. The previous low will take out the next high. If the market is going down, the previous low, which is here, will always take out the next high. So then we have common questions like, why don't the highs and lows then relate in terms of why is it not turning directly where the low was? We have something called zone, right? when we say the market will turn in this zone, we mean that the price will go back to a certain price, but we don't know necessarily where, at what exact price will the price turn it, because you'll never ever know whether price will turn at 1,253 or 1,257. But however, you know that when the price is on a low like this and it's time to pull back, it will pull back and come back into our previous low area, and that is where the zone is. This is what we call a zone. That's why you see most of my analysis, I normally love working with where I highlight a certain zone, because you never can really ever tell whether the price will turn exactly at a certain price, but you know that it's going to come back and tap in into the zone. That's why I always advise that when you're taking entries, do scale down to lower entries so that you're actually closer and more precise towards your entry point and your execution point, right? So the price here, after giving us a low, gave us a high. Of course, once the market gives us a high, it's gonna go back in there and then reject. From the rejection, then we have a drop. This drop will definitely come and break the previous low, that was created when the market dropped. Coming down to break the previous low, what must it do? It has to come back and pull back in and come back and respect the previous low and create a new high. Very simple. New high created after from the previous low. So that is actually a common and a simple understanding if you actually know how the market moves in terms of support and resistance. And price will continue to do this up until it decides to actually change direction. So after giving us a high, it will go down, break the previous low, pull back in again, give us another high on the previous low. It will continue to move like this throughout up until the market decides to actually now change direction. What do I mean change direction? Because in this case, we're looking at a sell trend, a bearish trend where the market is actually just going down. So we're looking more likely to catch more sells than ever, And can you take short buys here? Yes, you can take short buys, but of course it is a very risky trade to take, because you can't hold it for too long. It's more or less like scalping, and depending on the time frame. So you can take the short buys probably on not 1 minute. You can take the short buys on 1 hour and 4 hours. That's definitely advisable, because the time that if the market has broken the previous low and then has dropped to this area here, the amount of pips that are from this low to that high is good enough to make you good money. So you can definitely trade retracements, but I only advise on retracements on 1 hour. 1 hour, the lowest time frame I'd advise on is 1 hour time frame, 4 hours, and of course daily time frame. A pullback on a daily time frame is definitely an overall trend on 1 hour. It's a whole big movement on 1 hour. So if this was a daily, the daily chart, definitely I'd advise that you must take a buy here, because this movement from here, from this low to this previous low here, could take about a week or two, sometimes even a month. So it is advisable to trade retracements on big time frames. But if we're speaking 1 hour, 30 minutes, 15, 5 minutes, 1 minute, you don't want to be trading pullbacks. That's very dangerous. I mean, literally, you taking the trade and you don't pay attention, within 10 minutes, the market could have already gone back, given us that support and rejection there, in a support and rejection, and then immediately it then drops with you without you even being aware. You even being aware in a space of just 10 minutes. That's how dangerous it is. So and I'm talking from experience, guys. I've traded pullbacks on smaller time frames. They're very dangerous because it can pull back. You literally take a trade now, and you get busy for like 2 minutes, and the market has pulled back in, has turned the support into a rejection and is now dropping. And you are in some good profits, and you're obviously out, and your account would have been blown by then. So trading retracements, trading against the market is definitely not something that I would advise for lower time frames. So in this case, you can see the market has been going down. I did say this is the daily chart, right? So but let's just say it's a 1 hour chart to be more realistic. So on the 1 hour chart, you can see the market has been dropping. Possibly this drop is it's a weekly drop. It's happened over a space of a week, and the market now possibly wants to start going up. What do we do? In this case, that the very first thing you want to do is you want to identify a possible change of character. So you then identify the pattern. You get your tools, you identify the pattern, and then you want to make sure that especially your top trend line, and make sure that your top trend line is definitely running on top of the candlestick wicks, so that you are respecting the entire trend. And the moment you see a resistance on the bottom where the market is struggling to go lower, to go lower than the current previous low, then you know a possibility of a change of character, where price will definitely push over the trend line and then pull back in to give us a retest, where we have something more or less of an inverse head and shoulders or a double bottom, depending. And in this case, when the breakout happens, guys, I don't actually ever emphasize people to trade breakouts, especially on time frames like 4 hours and 1 hour, because when the breakout happens, it takes quite a while for the market to start traveling again and start going up. and now giving us the buy trends. It will come here and consolidate, sweep some liquidity, hit some stop loss hands, whatever you want to call it. And at that point, once the market changes direction, it breaks out, pulls back down, gives us a retest, or the last case, if you're still using the major key from way back, or the last case. And then from there, the market should start pushing up. And how do you actually confirm a change of character or change of momentum? It's very simple. When the price goes up, after it broke out, it definitely will come down and start consolidating. How do you now confirm that the market is starting to move now? Is that price must move up and break above the previous high that was created when the market was breaking the trend line. So when the market was breaking the trend line, of course, it was pushing to the upside, It was bullish. So it was pushing very aggressively bullish to the upside. And of course, as it pushes the upside, it will create a high right before it drops to come back and retest. And on that high, that is the price we want to see the market break before we can actually start trading it to the upside confidently. That's when now you're trading a more or less 90% profitable market, because the market is about to shift here. As it breaks that, you wait for it to come back and sit in, giving us our very first low after the breakout and retest, and then you can start anticipating to trade. So a lot of people ask, but then no, wouldn't you want to take your buy here when the market is retesting? I would advise to that. I do take those buys, but for somebody who's a beginner and somebody who's got limited capital, it is too much of a risk to take this buy on the low. The reason being is because when you're taking a buy here, you do not know necessarily when the market will go up. You can take a buy here and then it can consolidate and probably spike down, and it possibly might wipe you out before you even end up being in profits. So you want to wait for the momentum to begin, the market to start going up, and then when it starts going up, now you can see price goes up, comes back, sits on the previous high, gives us our very first low. You start anticipating your next entry points here, and then on a 1 hour time frame like this, if you're on a 1 hour time frame, what you want to do is you scale down to about 30 or 15 minutes. And when you get to 15 minutes, you realize this. When you get to 15 minutes is that after this low has happened, you will start seeing even other lows within the price. So the market gives us even more lows within the 1 hour push. You understand? So now you start seeing more buying opportunities. As the market is going up, you start seeing other lows on a lower time frame, because of course the lower the time frame, the more the technical movements, of course the more the opportunities that we see. So that's why in most cases, people that trade on daily time frames, they hardly ever execute. They're taking one entry per week, one entry per month, or never ever trading. And they're hardly profitable unless you're talking about the bank or somebody who's trading with 20 million in the bank. But if it's you and I, it's very simple. We have to come and analyze on a weekly, daily, and then at some point, go weekly, daily, 1 hour, 30 minutes, and then at some point end up on 15 and 5 minutes. I don't advise on 1 minute if you're not as sharp as I am, or you don't apply your practice all the time. But if you're really as good as you think you're really confident, then you can go from 15 minutes to actually 1 minute, because I don't execute any entry point without looking at it on 1 minute. So because that is it's a wise technical understanding. So before you can use any indicators, any sort of robots, any sort of plugins, you need to have a common understanding of the market and understanding of how do you actually track a market going up. It's going down. You need to understand the technical shifts, because even somebody that trades with a robot, you cannot plug in a product that you don't even know how to read a chart yourself, and that's why I always say that the most profitable traders that use robots is because they also know how the market moves. For somebody who has no idea how the market moves, what is a high, what is a low, what is a pullback, retracement, how to actually understand entry points, time frames, liquidity, leverage, how to actually, so there's a lot of stuff that go into understanding just as being a basic trader before you could start using very different and special tools. So this understanding, you can see I've broken it very beautiful and down for you. And what I spoke about here, guys, let me just highlight here. So what I spoke about here, where I said change of character, when the market breaks out to the upside, this is a very rare thing to happen on a big time frame. I spoke about it in the context of weekly or daily. Hardly ever have that. In any case, we're always just riding the wave. That's what you want to do. You get into the chart, and the simplest thing you want to do is just continue with the chart. You don't want to get there and try to identify things that are never going to happen or things that don't exist. That is going to take you about 20 steps back. And trust me, about 2019, 2018, I used to want to trade like that. Every time I go into a chart, I would just go in like, yo, okay, cool. Let me give you guys an example. So I would be like, every single time I would trade, I would do something like this. I'd be like, okay, just remove this, 2 seconds. Every single time I'm trading, I remember like way back 2018, I'll go into the market and I'm like, oh, okay. So let me just draw a chart simple. So let's say the market is like going up like this. I just get in without even doing anything. I'm like, okay. Oh, low, high, low. Then I just put a trend line. Then immediately I would never catch a trade up until I want to see this market break the trend line, pull back, and then drop. Then I will probably sell somewhere here or here, you know. And it never ever drops. It will take the next 3 months to drop it. That means I won't even trade. By the time I start trading, I'm so desperate I end up blowing. You don't want to be that person. You want to just come here and I'd be able to identify a movement that has taken place. Continue with the chart. You know, our entire idea of trading and analyzing, breaking down the market is not to change what the market has been doing. It's not trying to be a Euro USD sidekick, you know. The whole idea is to understand what the market is doing, what price is, how price is moving, and then join it. You know, if that makes sense, you know, in a very simple breakdown. But let's get onto the screen now. I'm going to show you guys a bit more as we break down Eurusd. And then, yeah, man, hope that makes sense. Sorry, guys, if I was actually rushing or speeding. It's because we have to head out to the stadium. It's 6 o'clock right now. And I said, what, let's do a market breakdown before we leave the office. But I'm going to give you guys this knowledge regardless. Doesn't really matter. But I'll be bringing a whole lot of these sessions in the office, probably like 2 sessions a week. When I come back from Uganda, you guys know I'm going to Uganda to run the marathon, and I'm going to represent your girlfriend, you know. So yeah, guys, USD open here. So obviously, on what I was showing you guys on the market board there is that it's pretty much trying to give you an understanding of the market. It's very important, like no matter what tools you're using, you know, not to disrespect anybody's tools, like whether you're using any sort of algorithm, any sort of indicators, you need to always have a common understanding of what you are doing. That's very important, you know. And once you understand the market to a certain extent, it'll work for you, you know. People say robots don't work. They don't work for people who don't know the market. You know, if you don't know, sometimes we use all these tools just to amplify our trading. I'm gonna start this analysis, guys, on 4-hour time frame, and just give you an idea of anybody who was trading, anybody who was trading EURUSD. Let's say it's from the beginning of August or late July. Let us look at exactly what they're looking at. So 31st. Yeah, so 31st, excuse me, sorry about that. So from the 31st of July till date, let's say, I mean, I haven't been trading USD, but if I was, what kind of trades would I have seen? So I'm analyzing from there going forward. This is a 4-hour time frame. So of course, I come into this market, and as I look at it, I can see the price has been dropping for quite a while. And if I highlight that low there, I can easily just see that, okay, this price has been dropping, but of course pulled back quite strong here. And yeah, so after this low, it pulled back quite strong. And I think everybody expected that the market will continue dropping after it comes here. So anybody would have probably expected the market to come back to this low here, and then from there they probably expected it to actually drop down further. But this is what I spoke about. You guys remember on the drawing that I had? Let's go back. I'm gonna take a walk back to the market there, and I'm gonna show you guys something really nice. Hope I didn't remove it. Yeah, so this is what I'm gonna show you what I spoke about just now. So the market was going down, and if you guys remember right here, I was speaking about a change of character. So price is going, it's going down, it's going down, it's going down, it's going down. And then from here it refuses, but it decides to then go up. After going up, it comes back down, gives us a low area here, but it's going to stay in one place, consolidate, take its time. We don't want to buy there. What we want to do is let the price pull, give it some time, let it push and break the previous high after the breakout. And once it breaks the high, it will come back and sit on that high. And that is where we start looking for our very next buy. You know, and that's very important. So let's look at the screen now. I've just explained to this, guys. I came onto the chart. I had not even analyzed this market. I came into the chart and I'm seeing something just like this, which is really amazing. So let's have a look at it. Price was here. Price was on this low. It pulls back up. We're all estimating that it will come and bounce off here and give us another drop. But then when we go to a daily time frame, we then have a different idea. The daily time frame then shows us that no, we do not see a further drop than this, because this is actually a buy market. It's a bullish market, so therefore we must start looking for buys as soon as possible. So we go back to 1 hour time frame to the same price, and what you want to do at this point, you say 1 hour time frame. Let me just show you something amazing here. When they say that Forex is like mathematics, man. If you don't calculate properly, it can give you a hiding. It can hurt you. It can hurt you. So look at it. Trend line. I take the trend line. I drag the trend line from the highest point till the lowest point. And immediately you can see a very powerful change of character there when I actually just zoom in. Price breaks out. Price breaks out aggressively. Actually breaks out there. And after it breaks, it comes back in and sits and give us our very first low. And this is what I spoke about, guys. This is what I spoke about when I said, let me just refresh. This is what I spoke about, and I said once the price does that, price breaks out and then comes back in, gives us our very first low area there. After we get that low, what are we waiting for? We want it to actually push above and come back and break this high. And when it breaks the high, it will give us the very next low. So let me show you guys. Now that is the low. Look at that. Breaks the high and it's coming back to sit on it. Any positions you would have taken at that point, would have definitely pushed you to remain in profit. The lowest negative you would have held was probably around about here. It pulls back in because it's pretty much playing on the previous low, which is fine. It's giving us a very strong double bottom, indicating more strength actually. So then we take buys here. We take buys on this area. We then wait for the price to come in, break above the previous high. Where is the previous high? The previous high is right here, guys. It's not a train smash. The previous high is right here, guys. What does it do from there? It breaks the previous high, pushes back up, and price comes back in and sits in here on all time frames, 4 hours, daily, and H4. You can see it there. It sits in there. This is how Eurusd has been traded over the past couple of days. And price goes up, gives us a very strong high there, and there's the high there. Gives us a very strong high. You can see. Gives us a very strong high. Gives us a very strong high. Price pushes up towards the high, breaks the high, then came back and then set on it right there. It's currently giving us another buy. So somebody would then ask, what about this area where the price actually was giving us a low here? That's what I spoke about. I spoke about something like a zone, because that area there, if I change time frame and I go to a daily time frame, you'll see how important is that area. Let me zoom in. But look at it on daily time frame. It doesn't look like a problematic scene, does it? Look at it. So on a 1 hour, we're able to put a trend line. Price broke out around here on 1 hour, pushed above the previous low, came back and set on the previous low, gave us our very first buying area, and then pushed up, broke the previous high on daily. It came back and what? It set there. So on daily, what are we expecting? Price must push a bit, probably bounce off that high there, then come back, drop in. It's going to come back and sit there. So on daily, you have a better and more of a clear picture of the movement. But of course, on 1 hour, that movement, that confusion that we are seeing on 1 hour is here. It's not a confusion. It's actually a pullback for a daily time frame to come back and give us a buy zone there. So you must pay attention to all your time frames. It's very important, guys. So I'll go back to H4 and show you the very same position, the very same spot, and you'll then understand it even better. Look at it. This is H4. So the very same area that looked very straightforward on daily, on 4 hour time frame, has given us a couple of lows. And when the price pulled back, when the price was sitting here, could you have taken a buy? You could have taken a buy. And the price went up. Well, it will be up to you whether you want to close or not, or you hold any further. And if you held throughout till this low, that's not a problem. As long as your risk management is good, because you are still within your entry point. The lowest zone to take entry is on this high right here. So price only reached that high once. But the zone here, you are within your entry point zone. That is what is important. You must be able, whenever the price enters your zone, you must execute. You must execute. I know SMC guys have different understanding of that in terms, they have different wording, and that explains it even better. But this is the zone, guys. When price enters into this space, I think they call it liquidity. When it goes into that area, that is our buy zone. This is where we want to start triggering our buys, because from here the market will then push up. You guys saw on daily. Look at how beautiful it looks on daily. Price came in right there. Let me just zoom in. Price came in right there, bounced off the previous high, giving us a new low, and right now it just broke the previous high, the previous all-time high from current price. Not all-time, but from current price, yes. Broke that high. There's it there. It came and broke that high. So what is going to happen next? Very simple. We're gonna go to 1 hour and try to see it a bit better. So 1 hour, then I'm gonna say reset so you can see it nicely. There's 1 hour. So 1 hour, the lowest buy that we want to catch would be on this red line. But however, 1 hour is what already has touched in on our zone, and it's currently facing a slightly down. So when we go in 30 minutes, we start looking for these entry points. You can see this was definitely a buy, but the market now is still consolidating. It's pulling back again to come give us a very strong low. Most likely, it was sitting on the inner high of the previous low of this 30 minutes, and we want to monitor this on 15 minutes. What is the possibility of it coming down? You can see that it's pushing down as we speak. So what are we going to wait for? We're going to wait for it. I want it to actually come into the zone. My next buy entry, as soon as it touches just the high of the zone, I'll take my very first entry point, because it can play around there. Good risk management. And then if it goes deeper, I keep entering trades. And my lowest entry position would be where? On the red line. From here, where are we going? We're going up, Guys, the understanding is very simple. It's very straightforward. I don't want you guys to get confused when it comes to breaking down the market. You must be able, it doesn't matter what kind of terms you use, what kind of market understandings you use, what kind of indicators you use, but you must have a great understanding of the market in order for you to be a good executor. I'm not the best analyst when it comes to the chart in terms of speaking the sharpest words on the chart, whatever the case may be. But however, I'm an executor. I execute. I know how to execute. I know how to catch the entry points, and that's what's very important. That's what sets apart analysts and good traders. That can you execute or not? I know a lot of traders who can speak the market, who can do whatever they can, but can you execute? Do you know how to catch entry points? And that's what's very important. That's what sets traders apart. You can either motivate people, tell them forex is real, or whatever the case may be, but can you do this? Can you execute? That's what's important. And that's what today's session is about, guys. What time is it now? Jeez, I don't know. Let me check the time. Oh, the time is 8 past 6. I have to be at the stadium at half past 7. Half past 7. So I'm going to watch Kaizer Chiefs play. You guys can see Kosi for live. Hey, we won the previous game, so we are ready. But hope you guys love the session. I'm gonna call it a session. I hope you guys actually love that breakdown, my understanding on the board. I'll be giving you guys a whole lot more videos, and just to help you actually get better. I'm back to dropping like heavy. I'm going to Uganda as well, so hope you guys do watch all my vlogs. All my videos, day in the lives when I'm in Uganda. I'm going to represent and stand up for women. And I'm running for me it means a lot because besides just sharing it on social media, I'm running for people things that are close to my heart. I'm even running for my personal stuff. So I'm going to enjoy. I've been exercising a lot, so I think this means a lot to me. And I've been locked in, man. So I just want to enjoy, just go out of the country and just, have some good time. But yeah, from me to you, it's been amazing. And thank you. See you guys on the next video. Danko.